everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of AdBits. On today's episode, how to add a Roth to your solo 401k plan. Now, I get this question a lot, so I figured, you know what? Let's do an AdBits about it. This is a podcast where you get a bit of information on a very specific self-directed retirement topic. And adding a Roth to your solo 401k is super important. But here's the great news. If you have a plan with IRA Financial, the Roth is already included. Nothing you got to do. It's already in the plan. Yeah, you don't need a separate plan. A lot of clients I speak to said, okay, Adam, I got this solo plan. I watched one of your videos on Roth. I really want to go Roth in a solo plan. Why? I want to do a mega backdoor Roth and put away $69,000 or $76,500 in Roth in 24, or maybe 66 or 73.5 in Roth in 23. And I need the Roth, Adam, hook it up. And I say, you know what? It's in there. There's nothing we need to do, because when we design plans, even if you don't ask for it, we are going to give you every bell and whistle that is allowed by law. We're going to do that for the same price, because that's what we do. We're nice people. And we're the best at designing these plans. So what do? I have a solo plan. You wake up one morning and say, oh, God, let's go Roth. Okay, you can call us, but this is the answer. So there's employee deferrals, profit sharing, and the mega back. Employee deferrals for 24, most you can put away is $23K if you're under 50, $30,500 if you're over 50. And for 2023, it's $22,500 or $30,000 if you're over 50. Okay, that's dollar for dollar, and that's in pre-tax or Roth. Okay. Then there's employer profit sharing contributions, which is 20% of your net Schedule C if you're sole proprietor or single member LC, 25% of your W-2 if you're a corp. That could be in pre-tax, thanks to Secure Act 2.0. Now it could be in Roth. Okay. So if you are doing a Roth employer profit sharing, just remember this: the contributions that the solo K sends you or the business sends you in the solo K, that would be taxable, right? Because Roth funds are after tax. Whereas if you get a pre-tax contribution, it's not taxable. In both cases, the employer will get the tax deduction, but in Roth, you'll have to take into income that profit sharing contribution. So again, there's pre-tax or Roth there too. And then there's the mega backdoor, which I mentioned, which works great in our solo plans, where you can go dollar for dollar and after tax and then convert to Roth 69 or 76.5 if you're over 50, 24. So how would I play this? So what I like to do, in a perfect world, I set up 3 bank accounts for my solo plan: a pre-tax bucket, a Roth bucket, and an after-tax bucket, only if I'm doing the mega backdoor. If I don't want to do mega backdoor, I'm going 2 buckets, pre-tax and Roth. And what I'm going to do is I'm going to just combine my pre-tax, employee deferrals, and profit sharing. And in the second bucket, my employee deferral, Roth, and employer profit sharing. Okay, so this way, you don't have to do this. You could easily just set up one account and just keep track as the trustee of your plan, what's pre-tax or Roth, what's employee deferral, what's profit sharing. It all vests, doesn't matter. But you want to keep track, because if you file a 5500 EZ, you want to make sure everything's accurate. You don't want to over contribute. So you want to keep track of everything. So I, again, would do the 3 bank accounts if you're doing the mega backdoor. If you're not doing mega backdoor, 2 bank accounts, 1 plan. So let's say your plan's called ABC 401k. You can use Capital One, so we use for our plans, and for our clients, we'll set up an account for free. You can do, ABC 401k and then maybe ABC 401k Roth, just to keep track. And then let's say you do $20,000 employee deferral Roth, and then you want to do profit sharing pre-tax, that's in the other bucket. Just easier from an accounting perspective, makes your life easier. You don't have to do that. I have some clients that say, hey, I'm going to go always Roth, so it's 1 bank account. Or you know what, like I'm going to mix and match, but I have an Excel sheet. It's not very hard. I just keep track what's pre-tax and Roth, and then the percentages kind of always work out, right? So, and that's cool too. There's no right or wrong way. You just, as a trustee, you need to kind of keep track of that stuff. So I like again, divvying it up and segregating, but you don't have to. So to answer the question on the podcast, the Roth is already included in the IRA Financial plan. Now, I'm only talking about an IRA Financial plan. I don't know if you have a solo plan with a different provider. You're going to have to ask them. I'm not sure how they design their plan. I know if you get a free plan from Schwab or Vanguard, they may not give you a Roth option. So just check it out. Loan, if you borrow against it, you can decide which portion is the loan. You can borrow against your Roth 401k as well. It's just a matter of what bucket you're choosing to borrow from. If you don't have enough, you aggregate everything and it's just pro rata, right? Let's say you have 50K pre-tax, 50% Roth, 100K, and you borrow 50, you'll generally get 25 from each bucket. But you would just keep track of that. Some people would say, no, I want it all come from the Roth. And technically, I guess you can do that because why? The 8.5% interest, which is prime as of January or February 2024, you would have a bigger return going to the Roth. So you can kind of pick and choose, if you wish, which bucket of funds will go towards a loan. Otherwise, it's simple. It's included. If you're a client of ours, we have a great annual compliance service, which you hopefully are part of, where you get updated plan docs, opinion letter. If you have audit questions, we help you. If you need any tax research done or any questions on prohibited transactions, UBIT, rollovers, conversions, distributions, mega backdoors, we do the 5500. If you 1099-R, if you are taking RMDs, we help you with that. If you are doing investments, we'll help you structure as well. So we kind of do everything under the roof. And I think that's what separates us. We don't just set up your plan. We're there for you. We'll administer, record keep, and keep your plan in full IRS compliance, which at the end of the day, where are you going to find a lawyer to do that for a couple $100 a year? Right. It's a no-brainer. And that's what we do. And we only offer it to our clients that have used and set up a plan with us. So that's it. Hope you guys enjoyed the podcast. It's a fun one. Now you know if you have a solo plan with IRA Financial, you also have a Roth for the same price. It's all included. So thanks a lot. Have a great day. Please, just a little housekeeping. If you can, just a good review would be awesome. Highly appreciated. Why? Because the better review podcasts get, the higher rated it'll get, more people see it, more people will learn like you. And that's how it all works. The more people that get informed, the smarter we'll all be, just grow the self-directed retirement community. So more and more people could save and do it the right way. Because guess what? It's not a zero-sum game. We all can get rich in the retirement system. It's not like only 30% of Americans can do it. No, we all could. Just got to understand the rules, and the solo 401k is a great way to maximize retirement wealth because of the massive high contributions, which again can be done pre-tax or Roth. All the same plan for the same fee. So that's it. Nothing me today. Have a great day. See everyone again next week. Take care.